JSW Energy is the company on our radar now. Very good quarter actually. Strong merchant power sales. The volumes were good, coupled with higher realizations. The margins improved because of lower raw material costs. So all in all, nothing to complain. The stock is down 1.5%. The market is under pressure, so maybe some profit taking there. Prashant Jain, the joint MD and CEO at JSW Energy, is joining us now to talk more about the numbers. Prashant, thanks a lot for joining in. You know, on all aspects, if you look at it, it was a very good quarter this time. But just give us a sense of how the demand trends are shaping up at the moment. The merchant power trend has picked up quite a bit over the last couple of quarters. But what is the kind of, market pricing that we are looking at? What is the kind of up moves that you're seeing in terms of demand over the next few quarters?
Yeah, hi, good morning. So demand is quite robust. During the quarter gone by, the power demand was up by 13%. And as we are speaking in the October month, till date, the power demand is up by 19% in the month of October. So I think there is too much of government spending which is happening. There is a lot of capital expenditure which is going on. Underlying demand for other items are quite robust, and that is what is reflecting in power demand. So power demand is quite robust. And that is also reflecting into the peak shortages, which we saw in the previous 2003 to 2008 kind of a scenario where we saw the similar kind of a deficit. And now the grid size is almost 3x of the grid size which it was at that point of time. So the demand is quite good, and we feel that merchant tariffs will be elevated.
That was my next question. So merchant tariffs at the moment, I think, are at about a little over 8 rupees a unit. What is the expectation as we move along into the fag end of the year, and by the end of the fiscal year as well? What are we looking at in terms of pricing?
It's very difficult to talk about the pricing, but one thing one should also remember that the coal prices are also very high now. With the oil inching to $95, the coal prices have already shot up to $135, and so that is also putting a lot of cost pressure overall. And there are the inflationary pressures globally, and all that is putting a pressure on the energy side also. And that's what we feel that because of all these reasons, the prices of merchant power will be elevated, but we don't know that what kind of a profitability it will entail to the companies who are into the merchant power sales.
All right. Hi, Prashant. Good morning, and thanks so much for joining in. We need to address all aspects of the stock. So you're giving us an outlook operationally. The markets were weak on Monday, so maybe that's why the stock was under some pressure. But there were some rumors as well that was doing the rounds. I need to put this to you so that we clear that rumor. You have any plans of moving on from the company, or are you sticking with JSW Energy? Because that was a rumor that was doing the rounds on Monday.
So I'm not sure about the rumors which are there in the market, and we would not like to speculate anything and would not like to comment on any kind of a speculation. As we speak, that I'm the joint managing director and CEO of the company, and there is nothing as such.
Okay, good. So no plans of moving on. We'll take that. We'll take your word for it as of now. Let's focus on business then. The short-term sales of the merchant power, they accounted for roughly around 200 crores on the EBITDA front for the past quarter. Now, give and take everything, do you think on an annualized basis, short-term EBITDA could contribute, say, around 700 crores, given the kind of challenges that you have, the seasonal aspect as well? I'm just trying to analyze that number.
So, Nigel, it is very difficult to talk about the kind of EBITDA contribution which can come from the merchant sales. But what I can talk about is that right now we are having a open capacity which is close to 800 odd megawatt, which is existing capacity, and there is another 700 odd megawatt which will be getting on stream during the current financial year. So that is the open capacity which we will be using to cater to the market. And as I said in the previous question also, that there are the inflationary pressure on the coal side of cost also. And it's very, very highly unpredictable to project that what will be the power prices going forward. So, but we will be able to capitalize on the dark spread, whatever will be available into the market going forward.
Okay, and in Bharat, that is around, I think, 700 megawatt, right? That gets commissioned sometime towards the end of this fiscal or the start of next fiscal. On an annualized basis, what could that contribute on an EBITDA basis, going by current pricing? Things could change, but as things stand, what could in Bharat contribute? Because we're looking at it from FY25 basis.
So what I can say that the in Bharat contribution will be little higher than the other two plants which we are having at this point of time, because they are based on the imported coal, whereas the in Bharat will be based on the domestic coal, and it is situated between the in the coal belt area. And because of that, the fuel price at in Bharat will be a little lower than these plants by, you can say, in terms of the percentage, it will be 40-45% lower. And so that will be giving a little higher contribution. And then accordingly, it can be estimated, whatever it will be the merchant sales price.
Got it. Mr. Jain, hi, good morning. Prashant here. Could you talk to us a little bit about what are the plans for value unlocking in JSW Neo? I mean, will we see a IPO? Will we see strategic investors coming in? Is due diligence on? By when can we expect an announcement?
So, hi, good morning, Prashant. So, we are, as we have been maintaining the stance that we are looking to evaluate all kind of proposals which are on the table. And the structure side, we are absolutely ready. And at some point of time, whenever we see it deemed fit, the board is going to consider either of the options which you have stipulated. And as and when such kind of a situation happen, then we will be certainly talking to you.
Sorry to press you a little bit. I mean, give us what you can, I guess. But will we see something this year, sir? Or and are investors already taking a look at it? Is due diligence on in full swing?
So, as I said, that we don't have any kind of a timelines. We don't have a plan to, which is totally fixed. But, we are really mindful about the growth of the company. We are a growth company. Right now, we are generating enough cash to fuel our growth, but we see the size of opportunity is pretty huge, and we can accelerate the growth going forward, provided we have more equity on the table. And for that, we need to have like-minded partners in synchronization for that kind of a growth for next 1 decade. So as and when something like that is materialized, then we will be putting it to the board, and then board is going to take a call on that part. So there is no firm timelines, but yes, it will happen.
Okay. Just one last point on this. Bernstein, just completely incidental, but Bernstein this morning put out a note, not on JSW, but on NTPC. And they, their thinking is that for NTPC, again, there's been a buzz that there'll be the renewable business will be spun out and listed separately, etc. They say it's not advisable. And they say that globally, we've seen many of these things happen, and then eventually, after a few years, these entities are re-merged. They come back into the parent fold. Large reason, essentially, is because the renewable business has got large cash infusion needs to build it up, etc. And that is best done, funded through the cash of the thermal business, because that is still the mainstay for most. I just wanted your thoughts, sir. And are there any takeaways for you when you're thinking about this? The options are open, you're not decided, but any thoughts?
So as of now, what I say that in case of JSW Energy, so far we have been utilizing the thermal business cash flow to fuel the growth of the renewable business. And as the power shortage is coming up, there are the opportunities to grow the... Yeah.
Sorry, go on, Mr. Jain.
Yeah, so there are the opportunities to grow the thermal business also, and as and when there are the enough opportunities which are coming up, we will be looking at the thermal business also. But I don't see that the thermal business is going away anywhere in next 1 or 2 decades.
Okay, all right. So, there is a very high visibility from within the JSW Group in terms of capacity addition. Just wanted to understand from you, what is the capacity that we're looking at over the next, say, 5 to 10 years? What is the targeted IRR for this capacity? What kind of pricing? If you can just give us a roadmap over the next, 5 to 10 years.
Yeah. So basically, JSW Group is a growth-oriented group, and then we have been looking at various opportunities within the group for from the decarbonization perspective. And in that aspect, JSW Steel, which is having a short-term to medium-term plan to go up to 50 million ton and eventually to 100 million ton, and we realize that in next 3 to 5-6 years, there are the opportunities to do close to 6.2 gigawatt of the renewable capacity for the group. And in addition to that, in order to make the green steel, they will be requiring close to 85-90,000 tons of the green hydrogen, which will also require close to 1.8 gigawatt of the renewable capacity and plus around 3 gigawatt hour of the storage application. And all this, we are expecting that we will be doing by 2030. With regards to pricing and equity IRRs, it will be at arm's length, will be discovered between the two companies together. Historically, we have been seeing that whatever projects we have been doing in JSW Energy, our threshold has been 15% equity IRR post-tax minimum.
Okay, 15%. So you'll hold on to that 15% IRR for this entire, 100 million ton, the journey from 50 to 100 million ton that you're talking about.
Yeah.
Okay. I just had one more word in terms of margins. We've seen the way coal prices have softened from the recent peak. So just trying to understand, what are you targeting in terms of EBITDA margins for the full year for FY24 and for 25?
We don't look at the EBITDA margin because, power is a very different kind of a business where, in case of our PPA tied up business, we are going to get the fixed cost recovery. In case of renewable business, the EBITDA margins are 80-85%. That is also the complete fixed cost recovery because there is no variable cost. It's only the dark spread which is relevant, which is in case of the merchant tariff, which we explained about the open capacity. So that is totally dependent upon what are the market conditions, and depending upon 1 rupee to 5 rupee, this spread can be taken.
All right, very quickly, Prashant, y'all had the edge with regard to sourcing some coal from Russia as well. Is that still on? If you could tell us how much of your coal requirement is coming in from Russia?
I won't have the absolute number right now, but yes, we have been really agnostic about the location. And we have been looking at, we see if there are opportunity from Indonesia or South Africa or Australia or Russia, wherever we are getting the cheaper coal on a variable cost perspective, we just go and latch it on. And so historically, we have been buying coal from Russia, and which have been proven to be the cheaper to us. But right now, in last 1.5 months, we have seen that the Russian coal prices are at par with other sources.
All right, Prashant, thanks so much for joining and giving us an outlook on business, and also clarifying that as of now, there are no plans to move on. So we're taking your word for that.